Hey, it's Kimosabi here, giving you a little update on what we're seeing. So, have some decent pullbacks coming today, and I wanted to zoom out to the daily chart and kind of start a naked chart and look at the encroachments of the wicks. So, I remember this wick right here, 50% of that wick, that is where we ended up at previous supports. Came a little sooner than I thought, but hey, it came down there. So another buy setup could be the 50% of this wick. So standard, whenever we see a large wick like that, measure it and mark off the 50% right there at the 0.5, which is something standard to do on your charts, is mark off those wicks. And you can label them as well so that you know what you're looking at. But yeah, that's a potential buy setup. You have the stronger buyers at the lower end of the wick. The weaker buyers came in late. They're in the upper portion of the wick, so eventually they get tested and potentially shaken out, put underwater, and they panic. But the strong buyers over here, at the very low of the wick, they're a little more convinced of their purchases. And it doesn't work 100%, but it gives you a high likelihood of a bounce. Like this wick over here on the 5th of December, you had price came down and tested it twice before giving the bounce at previous support. So any wick, you just mark them off, and that's an area to look for a buy setup. So while we have the daily chart open here, and potentially having this as a completed ABC pattern, I wanted to look at the consolidation between March and September, October of this past year to get some timing on it. So the beginning of the correction, starting on March 14th, I do believe it was, and measuring to the very bottom of the correction in time. So I'm using the trend-based fib time, and it came to the 0.618 of the entire correction before price broke out. So that's something to be aware of. After a long consolidation, it took that long before it broke out. So if we were to extrapolate the same data to the current correction, starting at the beginning of, well, all-time high, the previous all-time high, and project it from the current low, if that is to mimic the previous correction, your breakout point, or the 618 of that correction, takes you out to March 5th, which is the weekly cycle low or next daily cycle low that Camel Finance was kind of projecting. So that kind of lines up. Well, historically, February is usually a pretty good month. It doesn't mean it has to be, especially if most are projecting that it will be. So we might be stuck in this range still for a while. If we just mark it up like that, if we're still going to be in this range, we may, be repeating this consolidation upward trajectory and then get the spike down. So let's draw out kind of what that would look like. So having this as your potential corrective wave, there's your ABC. And what follows could be this, all this choppy crap just kind of repeats, chopping you up and down until taking the liquidity from above, and then coming here and doing that leg right there into the weekly cycle low, potentially holding the middle of the consolidation. That would look really good if then it wants to repeat all of this, which would mean price comes up and holds above the range before a breakout. So we may see, sometime mid-March is the actual breakout. Or it could be, right after March 5th, you end up having the breakout. If this was to have shown strength out of this low and started closing up above here, I'd say it's ready to go, but it has not done that yet. Maybe it comes back down and just shoots up there, but I'm a little less convinced. Usually if you have a Wyckoff spring, like this would potentially be after a reaccumulation, this should be back inside, and within a few days it should be showing a lot of strength, and it's just not yet anyway. So I'm very open to repeating patterns like that. We'll see. Now let's take everything back off, and we'll zoom into the local price action on the lower time frames, keeping in mind this 94,300 level, which is 50% of that daily wick. We're here on the 1 hour time frame. You could probably do this on a 4 hour and see how much higher that came, higher than those candles. So kind of looking for a higher low to be coming in somewhere around here on closes, which I don't know how far down the next higher low is going to be, but we can suggest that it would be around the 94,300 level, which lo and behold, there's a little bit of liquidity right there. So now I want to look at this current chart pattern that shows a potential impulse up, and most would view this as 3 waves back down. I am seeing it a little bit differently. And you kind of got to get like that. Anytime you see an Elliott wave pattern that just looks too good, you have to suspect they're looking for liquidity. So this can be seen as 3 waves back, and then an impulse up. You're expecting a wave 3 potentially to go way higher. However, you're just building stop losses here at the low. And you have your liquidity, your 50% encroachment of that daily candle, the daily wick. So to get down there and take that liquidity, I'm suggesting this leg is repeating right here. That's your ABC, and you're going to repeat this type of wave down right to there. Sometime, if I had to put a number on it, probably 3 o'clock New York time, 3 p.m. after the New York session. You should be down here if this pattern plays out very nicely. And out of there, you probably get this leg up, which would be another ABC, and take some profits at the liquidity, because we're likely to be chopping around until, the weekly cycle low. If we even make a higher high, higher low situation, we'll see. We might be building up for a while. We may take the lows, but this is where I would be looking for an uptrend to come out of tomorrow, potentially. If this wave was going to be really bullish, you would have bounced above the 100K level. You would have bounced on that for a while before taking liquidity, and you would have reaccumulated up here. You don't appear to be reaccumulating, which makes me think that you're coming down for more liquidity, and the liquidity that's being built there. Because anybody trading Elliott wave is looking at that as, well, there's 3 waves back, go long, here we go, which you get your bounce, it makes you think you're getting the trade, and then wipes you out. And then it goes. Which you could still count that as Elliott wave. You just count your ABC there. And then this becomes like a W. This is an X. And this would be a Y. And then this being some kind of A. There's your B. And that'll be a C. But just because this goes up in 3 waves doesn't mean that we're not going to have an impulse up. We've had this happen several times where the price will start to move up in an ABC and then move back down and then ABC back up. So it looks very corrective before it impulses. And this is where Elliott wave people kind of get screwed up when looking at things in terms of it has to be 5 and 3, 5 and 3, which is why I don't count fives and threes anymore. I trade trend and matching patterns. And currently on the 1 hour, you are in a downtrend. So I got to expect lower until that reverses. Same principles as going over here. That was just lower low, lower high, all the way down until right here. You closed a higher high, take the higher low, and there's your trade. Patience. Patience and wait for what you want to see. You want to see a change in behavior, and that was your change in behavior right there. So anytime you see that, that's the time to enter. There were some people that were entering all the way down here, and this is very common. What Bitcoin has been doing is it gives you that three-wave pullback, you're good, and then pulls back more. It's like, that's still in the realm of three-wave pullback, and then it pulls back more. It's like, okay, that's got to be done. We got to be bouncing soon. And then it doesn't bounce, and it just flushes. That's because of people adding to their leverage on the way down, not waiting for anything different, and not having a clear invalidation. It's just oh, this is, ABC, oh, BC, oh, BC, 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 shit. And they get wiped out, and then price runs back up and gives you the bounce. I did like how this area did not get taken out yet. So that liquidity is still there up above 1027. So that would be my next liquidity target, which you'd actually probably get an ABC up to reach that. If you measure that, project from a potential low coming over here. Yeah, your next liquidity would be up there, 105 to 108 for an ABC up. And then from there, push back down, maybe find support at the 100K, and then you can go. But like I've said before, they're not going to make it obvious, because then too many people enter the trade, and the liquidity providers, they cannot take that kind of risk, because they'd have to pay out way too much. So this is going to kind of hover, and they just want the lower liquidity. And it might even take out the low. I don't know. That's why I'm going to wait for a change in behavior on a low time frame in this area. If I don't get it, then I'm going to look for the 89 to 87 area. They might want that lower liquidity. We will see. So far, this matching here like an ABC up, and then we're repeating this pattern maybe. Totally possible. We could chop here for a while. Not very fun trading, but you do have a contracting pattern there. You might end up having another contracting pattern here. Let's draw that out now that I'm seeing that. If this is an ABC, this price action is coming all the way back down to the lows, then that would make sense to chop around like that until you hit 87. And that could complete this move. So I'm open to however this wants to resolve itself. I'm not set in any direction until we get above the range. And if price starts closing daily candles and holds above 110 or so, and just doesn't want to come down, maybe makes a reaccumulation pattern up there on a lower time frame, maybe on a 4 hour, and breaks out again, then it's go time. Until then, there's no reason to be like super bullish, especially when you're closing daily candles below 100K. That's in the lower section of the range, so it's not as bullish until you close candles up there and then look for upper liquidity. So that's the way I'm looking at it. Yeah, keep your stops tight. Have a good night. Look for a buy setup around 94. Look for a change in behavior. Trade it up to liquidity around 103. Take some profits and then reassess. You might have to add to it. You might have to buy higher. That's what trading's all about. Yeah, have a good night. Keep your stops tight.